Okay, hi guys. Welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the traders and analysts at First for Trading. Okay, we're a analytical and trade recommendation company. We cover 15 FX pairs, stock indices, fixed income, the Bund, and commodities. Okay. Basically what we do at the start of every month is we host a webinar for FX Street, and we talk about what we think are going to be the long or medium term objectives for the FX majors. I'm not going to do that today. Well, I am to a certain extent. I'm going to go through the FX majors. I'm going to go through them very briefly. I'm an unbeliever, if you like, on what's happening with regards to the dollar or the dollar index, and that's obviously the first chart that we've got up on the screen today. I was listening actually to one of the previous webinar hosts earlier today, and she was actually saying that it's unfashionable, it seems to be unfashionable, to hold the dollar at the moment, and that definitely seems to be the case. I mean, every time we even get some mild intraday rallies, they're being sold into. Even after non-farm payroll, we've got a push to the upside initially, then a reverse very aggressively, literally within the space of sort of 2 hours to overturn all the initial gains. And even with, the threat of QE from the Swiss, from Draghi and the ECB, it doesn't seem to even scare the market into buying dollars at all at the moment. So what I'm going to do, I'm going to just briefly go through some relevant resistance levels that I have and what I'm looking at day to day. And then I'm actually going to just flick over to the dollar index. And I'm going to talk about, because I don't believe, it's hard to say you don't believe what you're seeing. I don't believe it will continue for much longer. But as the age-old saying is, the trend is your friend, and you should be trading with the trend until the trend is over. I still believe that the trend, this dollar trend, is coming to an end. But instead of sort of recommending selling or buying at certain levels, I'll just give you forecasts of and relevant support and resistance levels, I think is the best objective. And then I'll go on to my other charts. I want to talk about DMARC. So, and just how you can use DMARC indicators on a daily basis, okay, for intraday scalping, for long-term analysis, long-term outlooks, for not selling into the base of the trend. Somebody's just saying, I'm presuming that sterling wouldn't fall as much as other pairs. Probably not at the moment. It's holding extremely strong, even against the euro. And just fundamentally, it's obviously, the chances of a rate hike in the UK are far stronger than anywhere else at the moment. So that's what I'm going to do. Obviously, if you can interact or ask as many questions as possible, then I do appreciate it. And we'll see how we get on. Now, the reason I've got this dollar index on here to start with is because, as I said, we're going to talk about DMARC in a bit, and this is one of the reasons, or this is the main reason why I'm struggling with the dollar index at the moment. I've got two charts or two chart packages. One of them is Aspen Graphics. And Aspen Graphics, I can get my DMARC indicators. Now, I also normally have a lot more on my charts than just a plain, what I call vanilla chart with relative strength. But what we've got here is DMARC and the TD sequential. Okay. Now, to briefly go through it, and I'm going to talk about price flips, the buy setup, the buy countdown, and all the other aspects of DMARC before the end of the webinar. But just to highlight something briefly before we go and just talk about the medium-term outlooks, is that DMARC has a price setup of 9 bars, okay, and a TD countdown of 13 bars. They shouldn't be mixed together, okay. Basically, a TD 9 count will normally highlight at least a correction. Notice I'm saying at least a correction. Okay, so here we've got a 9 count, exhaust, we get a correction to the upside. Here we get a 9 count, it's not a correction, it's a trend reversal. Okay, the 13 counts, as far as DMARC is concerned, are far stronger. Okay, the 13 counts will normally denote a change of trend. So here, obviously, we get the rally up. 13 count. We'll talk about stops and all the rest of it soon. And then we reverse to the downside. 9 count. Then we've got 9 count on the daily dollar index. Now, as with other indicators, oscillators, a lot of sort of trend line breaks, wedge breakouts, etc., etc., etc. The normal rule of thumb is that we don't trade until the close of that candle. Okay, so what I normally do is when I see a currency pair, and in the index, the commodities, etc., etc., on a 9 count, I want to have a reason why that should be exhausting. Okay, so obviously today we had the previous low. There was numerous support. Excuse me. Working on it off the screen. Okay, numerous support around 79.37. So that was obviously going to be our first port, if you like, for possible stalling in selling pressure. But if we look to this chart, which is dollar index on the Saxo Trader 2, we can see that we've got the trend of lower lows, okay, just coming in, just where this bearish price action has actually stalled. So I'm looking to these different levels for possible reversals, okay? I'm not going to try and fight the trend until I get at least a decent pattern that warns me, highlights me that this trend reversal is underway. But I would not be selling dollars at this level because of I've obviously got held on 2 occasions. I normally hold on 3 occasions, and if it's going to break, we'll normally break on the 4th occasion. Okay, we've got a 9 count on the daily chart, which highlights that we should at least get a correction. And just to talk again, we're going to go back to all of this, but just to talk, we'll probably need a day in an office to really cover all the nuances of DMARC, or at least a day in an office. Okay, but one thing that's also very relevant in DMARC is what they call the flip. Okay, so here, when we start to get a count, we get a count after what they call a TD buy flip, and that was caused by this free chart pattern at the base. Now, basically, what DMARC then says is that this is then your support level. Okay, so another reason or another level, okay, 79.06, for possible reversal in the dollar index. But like I said, we can't just go in. You can fade a move if you're that confident that it's gonna turn. You can fade a move, which basically means, you know, in euro, dollar, or cable, whichever currency pair you decide to choose, you could start selling small and sell a little bit more, and then sell a little bit more until or if this dollar index then closes below these relevant levels. Then obviously you'd have to come out of your fade. What I prefer to do myself is to keep an eye on that dollar index and then look for reversal patterns in the major currency pairs. Look to shorter time frames. Look for demark on shorter time frames. Look for outside bars on shorter time frames to highlight that that this dollar selling has reversed. Okay, again, we're not looking to fight the trend, but as we say, the trend is your friend, but only until the trend is over. Okay, so we've got to be wary of these levels. When is a buy in the dollar index? I mean, dollar strength, blah, blah, blah. Well, we'll wait and see, but we'll flip it over to some shorter time frames in a minute. There's actually something interesting, just about as far as I could say, in cable at the moment. We're getting some exhaustion counts on cable. Okay, 9 counts I call corrective counts, 13 counts I call exhaustion counts. Okay, so we're getting close to exhaustion counts in cable. There have been some outside bars in short time frames around the highs of today. So, you know, we could see some flipping in price action, but it might only be temporary. We really need to see a reversal off that 9. So, as I said, what I'm going to try to do today, basically because I haven't got any strong conviction in the medium-term outlook from current levels, so I'm going to talk about where I see some resistance levels, and then I'm going to then flip back to DMARC and talk about how you can use DMARC. And normally I wouldn't really sort of go into DMARC in sort of great lengths, but because before you can only really get DMARC on specialist chart packages, and it's quite expensive for a retail trader to pay for. But I do know that this day and age, I do believe that MT4, a lot of MT4 platforms, you can get TD sequential and the TD buy count and TD flip software. So it is. Euro dollar, mate, we were all weekly chart. I don't think I was alone here, but we were all sort of clucking on about the fact that we've got a trend of lower lows that held weekly, 61.8% held. You know, majority of technical analysts were bearish from this point. I'm still a bear, but I think we could quite easily now that we've broken out of that trend, see that 140 level. What I do see is I see a severe lack of momentum, and I see the trend of higher highs and higher lows shortening, which is quite relevant, quite easy to see on this weekly chart, and that normally dictates that we're into an ending wedge formation. Okay, it's highlighted a bit better. Divergence, you know, a lot of people talk about divergence when obviously the chart makes higher highs, and then we get oscillators that make lower highs, and that will normally dictate that we're going to get a change of trend. It always happens in wedge formations because of the lack of upwards strength. Okay, so the trend of higher highs comes in just over about 140.20. So if we do see it, I think you'll probably just get a spike through and then a move back down, and then I'll target 137.50 again. We haven't really got divergence from current levels. An ABCD formation is quite interesting. And that's about as far as I can put it, in the fact that it just gives us a projection just over 140.40. Okay, I'm going to flip back onto this chart here, which is, I'm going to go to euro dollar. Excuse me, euro dollar underscore FXCM. Can't even spell properly. Let's go FXCM. Okay, and go to the daily chart. Okay, because here, again, we've got, don't forget what chart package on. We've got a 13 count. Now, 13 counts are more relevant when they're at the top of the trend, okay? The difficulty with them being in the middle of a trend, and this is most definitely in the middle of the trend, is that we have to take the highest high of, because there's no point in having a system if we don't know how to trade it, okay? So you have to take the candle with the highest high within that count, so within this 13 count, and then add it to the candle, okay? So you basically click on this candle, you work out the high, which is about 66, 139.66, and the low 138.44, which is about 120 ticks. You've got to then add that onto the high of that candle formation. Okay, so you can see just from that, 148, there's plenty of scope for upside pressure. So sometimes we'll get a flip like we did here, okay, and we'll get a decent move to the, here was obviously a decent move to the upside, this will be a decent move to the downside. Sometimes it's a warning and it gives us more of a stop than it does the actual candle. You add it to the highest candle in the sequence. So you take the range of the highest candle in the sequence, you then add the stop. So it's the range, the high of that candle, plus the range is your stop level, basically. And again here, you can see how it works. Well, in some conditions, okay, 9 counts, 13 counts, and then others aren't so clear, okay? We had that trend of lower highs, and I thought that 13 count was going to react there. It did actually push lower, but not as aggressively as I thought it was going to. So, like I said, we're going to briefly go through sort of medium-term analytical outlooks and not spend too much time on it. So, like I said, 140.04 is the top of that trend. There is some resistance around 139.58, and I'll keep a very close eye on that today. If that breaks today, then it definitely opens the door for 140.04. Or maybe just a little cable again. This is a weekly chart. We've broken through these upside barriers. There's not a fib seen until 171.81. However, we've got a previous high up here at 170.50, which is about another 75 points away. Again, there's no reversal patterns really for intraday traders. We should be just looking at buying dips. But again, I'm going to talk about this dollar index in a bit and how we can maybe try and catch a high trade today. If it's going to happen, it's probably going to happen through this session as well, through this hour. Dollar Swiss, again, there's no, this is a monthly chart. Gains are being sold into. We can look to sort of daily. Oops. We've got an area here of previous support. I wouldn't be selling it, but just at these levels, but just on the back of the dollar index. If it breaks through this low, then, like I said, it's there is scope potentially to get down to 85.18. But like I'm saying, it's always a case of trade what you see, not what you want to see. At the moment, we're seeing lower lows, lower highs. We've got reversal candles, monthly reversal candles off the highs. Weekly rallies are being sold into, daily rallies are being sold into, hourly rallies are being sold into. So it's very, very hard to try and pick a base in these currency pairs without some decent reversal candles. Dollar yen, been trying to call a top in this for a while. Actually tried to sell into rallies this morning and didn't get the rallies. This was Friday's high after non-farm payrolls, was just under 61.8% and spiked through the daily cloud, which gives us a medium-term bias to the downside. This has been a corrective channel. This candle here, which is an outside candle, should be noted that outside candles are different to engulfing candles. Okay, outside candles completely take over the range of the previous candles. Engulfing candles only take out the high and the open and the close, and people need to make note of that. Okay, they're stronger candles. The reason they're stronger candles is because it's made a new high. The bulls at the start of that session were still in control. They've most likely been stopped out and to reverse positions, etc., by the close of that candle, because we have taken a high and then taken a low. Okay, it's actually taken out two sessions there. Again, here it's an outside candle, completely takes out previous 2 days sessions. Outside candles. Okay, they're much stronger than engulfing candles. So now we're breaking out that channel base. I think 100 realistically we should see before the weekend, or I should say before the end of the week. Can see no technical reason for a change in trend. Can you please explain how much cable can retrace from the current position? Like I said earlier, I'm not trying to catch highs and lows, and I've got no solid reversal formations yet. I'm looking for indications that there's some scope for downside pressure. At the moment, I mean, on my other screen, I've got 30-minute, 50-minute, 15-minute, 10-minute, 5-minute, 3-minute, and a 1-minute chart. I don't see any reversal patterns in any of those at the moment. The 3-minute chart is on an 11 count, 10-minute chart's on a 13 count. But as I said before, if you're going to look at using DMARC, or you're going to look at trying to catch highs and lows, you need more than just a 13 count. Okay, well, I look for more than just a 13 count or a 9 count. I look for that to highlight possible exhaustion, but then I'm looking for a reversal candle. And as I said, the main reversal candle that I look for is an outside bar. Just to try and explain what I'm saying. Okay, here is cable daily. There's a 13 count here, but no reversal candles. If we break this down into shorter time frames, okay, and we're going to talk about this TD flip as well in a moment, which is relevant, very, very relevant. Okay, there's a 9 count here, but there's no reversal candles. 30 minutes, we're moving up. There's no reversal candles. I don't have any indication of a change of trend as yet. 20 minutes I don't look to. 15 minutes, again, 9 candles are warnings, corrections normally, okay, but no reversal candles. There's no outside bars, there's no evening star formations, etc., etc., etc. We're not, I can't emphasize this enough, I'm not trying to pick the top of the trend. I'm looking for the market to tell me when the trend has changed, and at the moment it hasn't. 10 minutes again. There's no reversal candles. I've got a warning signal. There's a 13 count. Okay, if I get a 13 count, then I'm looking to shorter time frames. In this case, 5, 3, 1 for reversal candle formations. And again, I haven't got them. Not after the 13 count. If only I knew. Just saying here, if there is no reversal, then how much above it can it go? DMARC, basically, as I said before, you take the highest candle, you add the length of that highest candle onto the 13 candle. If you just want to purely trade to DMARC, if you want to take every DMARC signal that there is, that's what you do. You take the 13 candle blindly, okay? Like, it's not... Some people say that DMARC's a standalone system. I don't, okay? Anything else, you've got to have a view. I am into system trading, don't get me wrong. I do believe that I prefer to stick to a system that tells you to buy, tells you to sell, but with a view. And that's why I have absolutely no open positions at all at the moment, because like I said, I missed the dollar yen trade this morning, and I don't believe. Well, I don't want to buy cable and euro dollar up here. I prefer to sell it. With your outside days, I know you previously noted buying or selling halfway in the candle. How many candles do you allow before it is invalid to buy and sell at that level? What I have a tendency to do is an outside day. If it's a solid outside day, then you can. The reason why we say sell a halfway through it is because that is the 50% line to start with if we get a retracement. It's also the Marabuzo level. So normally you won't get too much of a push higher, even if you do get a mild push higher through that 50% level, because you normally just get a push to 61.8%. But again, I would look to shorter time frames, especially on a daily chart. Say the 1st of January here. It's still valid until the high of that candle is taken out, if you like. But what I prefer to do is I prefer to go into shorter time frames and look for the same sort of pattern formation or an evening star formation in shorter time frames to get me short, if you see what I mean. So if it's on, I don't also see any problem in fading move if you've got conviction for that mood. But what I mean from that is if you have got an outside bar and it is at a relevant level, there is no issue, as far as I'm concerned, in selling a nominal amount, say 1 unit of whatever your units are, and then if it moves higher against you, looking for reversal candles in the direction of the trend to then add in. It's only invalid when the higher that candle is taken out. The Marabuzo level is we talked about outside candles. Okay, outside candles is the high and the low, overtaking, engulfing the previous candle. The Marabuzo level, you take the open and the close, you add them together and you divide by 2. So Marabuzo level, you really want a solid candle formation with very little spikes in either direction. And then you take the midpoint of the open and the close. Okay. Like I said, I didn't want to spend too much time on analysis. 108.44 is my target level. Well, 109, the figure is actually my target level for dollar CAD today. 108.44 is the target level in the medium term. Aussie dollar, I could see commodity prices hiking. I can see Aussie dollar still pushing higher. There is a 13 count on the 1 hour Aussie dollar at the moment, but the stop is not until about 93.80. You got to remember, when you see these 13 counts, yes, they normally denote a change of trend in that time frame, and that's something else I should emphasize. So in that time frame, it doesn't mean because we've got 13 count on 5 minutes or 10 minutes that suddenly we're going to go 200 points lower over the next 2 days. It can happen, and it does happen. But normally what will happen is we'll get a change of trend. We'll get a move lower. I wanted to spend more time on this, and hopefully we will have time, okay, because they're more of the instructions, okay. If you get a 13 count and you get a decent reversal candle, it will normally target the start of that count, okay, so the 1, and that's going to bring me on to TV flips. So anyway, Aussie dollar, sterling, I have no particular bias on. I think this gap open still from the beginning of the month is a concern. Not expected to be filled at some point, but like I said, we've been inside this range for God knows how long now, from this candle, which was formed on the 30th of April. So, you know, over sort of 6 days, we've been inside that range, and I can see it staying choppy. Euro yen actually got short of this pair at 141.97 this morning. It's in a symmetrical triangle formation, but using correlation, and that was about all we did have this morning. We didn't have any decent intraday signals. I think we've basically pulled back to around 78.6%. 142, the figure was a decent area of resistance from before. It was also an ABCD formation. Needs to break out of this symmetrical triangle formation, but using correlation again, dollar yen has broken out at the bottom of the channel, so I can see euro yen going lower. How much lower? Again, I sort of take it as on a daily basis, really. The first area of support's obviously around 140. If we can break there, then I could quite easily see move down to maybe around about 135 over the medium term. Okay. Let's get rid of that. We're going to talk about the dollar index, aren't we? Okay, so the trouble is as well with just purely. I mean, I diagnose. I look to the dollar index every morning before I look to anything else, because basically, if we can get the dollar bias correct, then we can get 6 out of the 8, well, near enough get 6 out of the FX majors correct. So at least the dollar bias in those 6 FX majors. Of course, we've got crosses that influence it, like euro sterling. We've got obviously euro Aussie, etc., etc., etc. But if we can get the dollar bias correct, then it does give us a good standing for the day. The trouble with using the dollar index to intraday trade or to scout, and this is why we need to see confirmations when we get these short time frames, is that the dollar index is between 50 and 30 minutes delayed, depending on what chart package you look to. Okay, now I've got some things that I've written down I wanted to show you. Right, we're going to talk about the price flip first. This is quite a good website that I found yesterday, actually. I just because obviously there's books on it. The best one being The Mark Indicators by Jason Pearl. He's actually written it for Bloomberg, and this guy has basically obviously taken the book and written up the basis for DMARC indicators. Now there's what they call the buy and sell setups, okay? But there's also the buy and sell countdowns. Now, the setups were the 9 counts that I was talking about, okay? So normally what will happen is we'll get what we call a TD flip, which is an important level, which we want to talk about. And then it produces or starts to produce the the 9 count, 9 consecutive closes in the direction of the trend, with each close higher in a bullish count, obviously, than the close 4 bars earlier. Okay, but it's the price flip as well, which is important. Now, the price flip, so say we're in a downward trend, so here we're in a downward trend. Now, it's always hard to try and pick the bottom of the trend unless we've obviously seen 9 counts, 13 counts. I see bullish outside bars, bearish outside bars. I see trend lines with price action reacting at a trend line. I've got a fib level, price action reacts at a fib level. Okay, notice I'm always saying react. We get a reaction. We have to get a reaction. There's no point in having sort of trend lines. You know, trend lines are there to be broken. Fib levels invariably will push through them. Okay, but they're target levels. They're good target levels. They're good reversal levels, especially obviously 261.8%, 423.6%. But we also want to see when we get them. Now, a TD flip is, to me, as good as an outside candle. Okay. The trouble is, I don't have an indicator on any of my chart packages that actually highlight the TD flip. The first point that I know that a TD flip has happened is the 1 bar. Okay. So a TD flip records, and this is a bearish flip. Okay. So from the top, records a close greater than 4 bars previously, and then immediately followed by a close less than 4 bars earlier. Okay, so as soon as that happens, the count can then start, and the count has to be 9 consecutive closes, each one more than the close 4 bars earlier. So in other words, you could quite easily be in this count here. The count then falters and it will disappear off the chart. Okay, that's what can happen on the buy or sell setups. What happens? So it is a game of patience. It's TD sequential is actually the full name of this DeMark indicator, and there are numerous DeMark indicators. The difference with the 13 count is that the 13 count will keep on being regenerated. Okay, so in other words, this count would keep on going until the relevant chart formations had been produced to highlight that exhaustion count. Okay, and you can only get a sell countdown after you've had a sell setup. Okay, so you have to have the 9 count first before you can have the 13 count. And as I said before, a lot of the time, the 9 counts will just be a correction before the next leg lower. I'm just looking at cable here, wondering if we're going to get a trigger up at these levels. So I'm just going to flick through some charts on my other page to see if we've got any decent sort of DeMark reversal candles. Euro dollar 10 minutes. It's only on a 10 count, but it's saying that 15 minutes on a 9 count. There's no strong reversal candle formations at the moment, but we've got a a doji star that's formed on euro dollar 10 minutes. And again, we're sort of, we're not trying to catch the top of the trend, but that's sort of offering maybe a 7 pip stop with a stop above 139.50, and your target level would be sort of 139.20 area. So again, risk, we're looking for sort of decent risk reward trades. Dollar Swiss has posted an exhaustion count, 5 minutes. Remember, all of this is only on the backhand. That we've got. What's that called? The fact that we've got this 9 count. Okay, on the, again, the scope for a spike, but signals are far from strong. There's no reversal candles even off the lows in dollar Swiss. This is what I was going to show you, wasn't I? I've got to digress a bit. Dollar CAD. Okay, so what I'm looking for majority of the time is combinations. Okay, so one indicator, I'm not looking at loads of indicators, but what I want to see is price action with relevant exhaustion counts indicators. I'd like to see RSI in an overbought area. I mean, this is prime up here. You've got a 9 count, you've got an engulfing bearish outside bar, and you've got RSI up around sort of 75, I think it was, 72. So a classic sort of reversal formation. I also have my own bespoke indicators that I've developed over about the last 10, 12 years, which I obviously don't disclose because it's my sort of grey box system. But what I also look for there is for prices to move up to certain resistance levels. I then look for outside bars. I keep a note of them on a very large notepad. And what I have a tendency to write is outside bar at TL, which is my my levels. Outside bar at TL with a demark exhaustion count on such and such minutes. So if I get 3 things lined up, which I did here, this was a TL level. This was a bearish engulfing on the 1 hour. I can't actually remember what the, here you go, is an outside bar on 30 minutes, and it was also a 9 count. Now, another thing that I wanted to talk to you about was the TD flip. Okay, so the TD flip becomes a support and resistance level. So basically here, this is the TD flip. You can actually count some traders take it from the 1 count. Some traders actually take it from where the flip was produced. Okay, I take it from the low. So that then becomes support. If that support level is broken by the next 9 count, then it will normally dictate, okay, that trend will continue. Okay, so again, very hard with these big spikes from Friday. But again, with a lot of sort of technical analysis, if a support level is broken, it will then become resistance. if a resistance level is broken, it will then become support. And this was obviously support, got broken by this 9 count, okay? You then get another 9 count with very little reaction. You then get a move up towards what was resistant, support now becomes resistant, and then obviously the sell-off. You've got to take note of this again. It's just about to read a 13 count. It does not necessarily mean that we're going to get reversal. And I don't see any support until 109 the figure. Again, that candle's not closed. How long have we got? We've got another 15 minutes. And then, even when that candle has closed, if you're going to take that as a buy signal, you'd need to take the high of that candle, the low of that candle, and then add that spread of that candle onto the low of that candle. So you can easily see now, I mean, it's nearly at 10. The high of that candle's at 22. So the stop's going to be below sort of 109, the figure. Like I said, what I normally have sort of more of a tendency to do is to wait till it's closed and then look for relevant support or resistance levels, and then look to shorter time frames, okay, for reversal patterns. So again, trying to keep it sort of quite tight. Let's just go back to Eurodollar and see what's happening there. See if we're getting that turnaround off the So flicking through the time frames, and of course I have them all on just one screen, so I don't have to keep on doing this. At 15, again, you've got a 9 count, but no reversal candle formations. But remember, I'm still thinking about that dollar index. And then there was we got a 10 count, but with that evening doji star formation. One thing that we should also, it's probably an 11 count actually, probably just can't see it, there you go. What we should also note is that the 13 count has to be above the 8 count. So the 13 count would have to be above the 8 count. So if we move back down, could quite easily form a little head and shoulders here actually, moving back maybe to 139.30 and then move back up just to above maybe 45, just to produce a 13 count and then move to the downside, and then would have a nice head and shoulders with a target level around 10. Obviously, I can't tell whether or not that's going to happen yet, but what DMARC says is also with these exhaustion counts is that the 13 count has to be above the 8 count. Okay, otherwise it is invalid. I hope I've not confused everybody. Like I said, I mean, the dollar index does look strong to the downside, but there are a lot of warning signals around. If you are going to look to DMARC, okay, keep an eye on the TD flips, okay, where the counts start from, because they are very relevant support or resistance levels. Concentrate more on 13 counts than 9 counts, because invariably 9 counts will only be corrections. If you are going to trade 9 counts, then look to a shorter time frame to get a reversal formation. So, i.e., here is a 9 count. This one, going back to this one, evening doji style, tight stop, etc., etc., etc. Try not to screw it all the way down into a 1 minute chart. I like to take signals off sort of 30, 15, 10-minute charts, because I know that I'm then giving myself a decent target, because we've all got spreads to pay. Okay, if you take it off a 3-minute candle and then a 1 minute chart, where once you've taken your spread, you might only really have a 2 pip stop, and then you've got another 2 pips for your spread, and your target might only be free. So it makes it pointless. Okay, thanks for attending. I hope you enjoyed it, and I'll see you again next month. Okay, thanks a lot.